Hello and welcome to AI Market News by LM. Okay, let's dive right in. It is a pivotal week ahead, no doubt about it. The markets are really facing three major tests that are going to define the entire trading landscape. We're talking about rising geopolitical tensions in Asia, what could be a make-or-break earnings report for the whole AI sector, and yeah, some pretty worrying signals coming out of the crypto world. So here's our game plan. First, we'll unpack what's happening in Asia. Then, we'll get into those high-stakes earnings from NVIDIA. After that, we'll take a look at what Bitcoin's recent moves might be telling us. And finally, we'll run through the economic calendar so we know what to watch out for. All right, first up, Asia. There's a lot going on here. Geopolitics and some key economic data are really setting the tone in the East. And a pretty sharp diplomatic dispute is already having a direct impact. So based on the prepared resources, this quote right here is a really big deal. We're hearing from the Japanese Prime Minister, and this is not just your typical diplomatic talk. Beijing is reportedly viewing this as the first direct military threat from Japan in, get this, 80 years. That is huge, and it's ratcheting up tensions in a way that's making the markets very, very nervous. And you don't have to look far to see the economic fallout. China immediately issued a travel advisory, and boom, that's hitting Japanese travel and retail stocks, and hitting them hard. We can see it right here, with big names like Shiseido and department stores down double digits. That's a direct, immediate impact. And to make matters worse, it's not just geopolitics. Japan's economy is also flashing some warning signs. The latest numbers show a contraction of 1.8% in Q3 GDP. Now, okay, it was slightly better than some of the worst-case fears, but it's still the first time the economy has shrunk in 6 quarters. This really throws Japan's recovery into question and starts the conversation about new stimulus. And of course, that has massive implications for currency traders watching the USD/JPY pair. All right, let's pivot to what is arguably the single biggest event of the week, maybe even the month. We're talking about NVIDIA's high-stakes earnings. So the big question on everyone's mind is this: is the AI rally running on fumes? Because this report, it's not just about NVIDIA. It's really a crucial test for the entire AI narrative. It's a bellwether for the whole sector. And when we say expectations are high, they are sky high. We're talking about a projected $66 billion in quarterly revenue. $66 billion? I mean, to put that into perspective, that would give NVIDIA a bigger turnover than Ford or Bank of America. It's just a mind-boggling number. And it's not just the top-line number. Wall Street is expecting a stunning 56% year-over-year growth. That's already priced into the stock. So here's the thing. NVIDIA can't just meet expectations. They have to absolutely crush them. Anything less could spell trouble, not just for them, but for the entire NASDAQ. You know, this quote from some of the news commentary really says it all. AI needs to tell a good story again. It's so true. The market needs more than just the numbers this time. It needs that narrative to be re-energized. It needs confirmation that this whole thing is for real. Okay, now for our third big test of the week, let's look over at the crypto markets, because Bitcoin is sending out some signals that could be a warning for the broader appetite for risk. I mean, just look at this timeline. It's been a wild ride, and not in a good way. We went from record highs and euphoria in early October to now, where all of the year-to-date gains have been completely erased. Just gone. It's been a dramatic reversal of fortune. Now, here's why this matters to everyone, even if you don't trade crypto. This isn't just about Bitcoin. This is a classic canary in the coal mine situation. A crash like this often signals a broader risk-off sentiment taking hold. It means investors are getting scared, they're losing their appetite for risk, and they're pulling money out of speculative assets. That fear can easily spill over into the stock market. Okay, so with all that in mind, let's quickly run through the economic calendar to see what key data points we need to be watching. All right, 3 big things to watch. Wednesday, we get the Federal Reserve meeting minutes. That's going to be huge for clues on interest rates. Then, Thursday, the delayed U.S. September jobs report finally drops. And all week long, we'll have various Fed officials speaking. You can bet that traders in the S&P 500 and the Euro USD will be hanging on every single word. Of course, there's a lot more than that. For a full schedule of everything coming out, we always recommend keeping the calendar on investing.com open in a tab. It's a great resource. So it all comes down to this, doesn't it? With the whole AI story on trial and risk appetite clearly fading, what happens next? Are the markets going to find a reason for a year-end rally? Or is this the start of something deeper, a bigger correction? Now for our standard disclaimer. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.